today we are going to talk about bank statements. Hello, this is David Xie with the Xie Mortgage Team, powered by Nexa Mortgage. So what is it with bank statements? Bank statements are probably one of the number one reasons why loans get denied with lenders. And these are some of the things to really watch out for. And I'm going to give you some tips and tricks to make sure that your loan gets approved. The number one thing to really look out for is to watch your deposits. When people are going through the home buying process or preparing for the home buying process, anxiety builds up, right? You're like, wow, I really like this home. I'm really worried about some things happening. I'm not getting a 100% feel good from my loan officer or whatever it may be. There's a lot of anxiety that goes on when you're buying a home. And as a mortgage professional, it's something that we deal with every single day. But as a consumer, you don't deal with it every day, so you don't know what to do. And what consumers tend to do is they go out, they start selling a bunch of things. They have these other side hustles that they're doing. They're helping their buddy down the street watch their animals or walk their dogs or even babysit children, right? And what happens is when you start getting these deposits that are randomly going into your account, that's something that's heavily scrutinized. And it could go towards like, hey, do you have a second job that we're not verifying? Is there maybe some extra money that we don't know about? And some of the income limits may be affected, like on a USDA loan or even on some of these first-time homebuyer loans. So definitely watch your deposits. If you're going to sell something, make sure you're documenting what you're selling. If you're going to get anything as a form of payment or maybe birthday money or something like that, make sure you're getting it in the form of a check, because if we have to use it as a gift, we have to be able to verify where it came from. So getting that check is really important. The second thing is expenses. We ask the question all the time when we're doing a qualification. Hey, is there any alimony, maintenance, childcare, child support, anything like that that's not going to show up on your credit report? And time again, customers will tell me, no, I don't have this expense. I don't have this. I don't have that. And when we're looking at a bank statement, because an underwriter, it has a very keen eye. They're looking for expenses coming out because that can affect your debt to income ratio. And if we see like an expense coming out of your account going to a person every single month, like for instance, I pay my mother every single month just cause, that could be viewed as an expense that's coming out of my bank account. And an underwriter, when they see that, they could question, hey, why is this money coming out every single month? Underwriters have uncovered maybe additional children that a husband or wife may have. They could discover like a undocumented child support or alimony because there was a separation that was handled outside of the court systems. They can also see that maybe there's a recurring transfer that's going out to maybe even like a separate house, that you may have, or a timeshare or something like that. So when an underwriter is looking at bank statements, number one, they want to look for your payroll deposits, okay? And when they're looking for those payroll deposits, they're highlighting all of the expenses that are coming out, and they want to make sure that there's not any recurring transfers. The second thing is that you always want to match your bank statements. So if you get a pay stub, and the pay stub says that it's going to two separate banks, then we're going to need both bank statements. And we're going to need complete statements from those bank accounts with all the pages, even if some of the pages are blank. And we are looking to just make sure that, hey, the income's going to match up. And we're also looking back at some of those expenses or recurring transfers. All pages is extremely important. A lot of times consumers will get to maybe a 7-page bank statement. The page before the last page may have a little bit of advertisement on it. And then the last page is saying that, hey, this is intentionally left blank. If we're looking at a bank statement and it says 1 of 7, we need all 7 pages. So make sure you retain all pages of your bank statements. When you're scanning the bank statements in for your loan officer, if it's double-sided, make sure you're scanning both sides. That's always a common mistake that we have to encounter. Make sure the bank statements, if you're going to print it out online, do not block out any information, or you don't go through and modify some of the account numbers, because if it's modified, a lot of times, investors are not going to take it. They may think that you're trying to hide something. If you're going to work with a loan officer, you got to make sure you trust them at all phases of the transaction to make sure that, hey, if we are going to work on your loan, you have to treat us as if we're married and we share all the information. And then finally, I think one of the biggest mistakes when we see bank statements is when someone transfers or changes from one bank to the other. We always see someone like maybe have $20,000 ending balance in an account, and then when they transfer the account over to another account, they may say, hey, let me go ahead and pull $2,500 out just for a rainy day fund, and then all of a sudden $1,750 goes into the account, and you have this cash that cannot be documented. Or someone will go to the bank and they'll deposit a check from a pay stub, and before they deposit it, they may ask for $300 out, and we cannot match that deposit up. Always, 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 especially if you're getting paper checks, match everything up, make the deposit into the account before you pull any money out, and that way we can see where everything's coming from and going to. So these are the biggest tips and tricks and the biggest reasons why loans get denied. When you're dealing with a traditional lender and or a bank or credit union, a lot of times one of the things is that they have one investor. And with that one investor themselves, if the loan gets denied, it's denied, and they have to just take it down the street to their friend. When you're dealing with a wholesale mortgage broker, number one, you're saving money. You're saving a lot of money, on average between $8,000 and $11,000 per transaction based on 2021 HMDA data. But number two, we have options to where we can shop. So if we submitted it to one of our lenders, at least for myself, we have another 188 different investors that we can also send it to. So if you were to get denied because of a mishap on one of your bank account statements, not saying that we want to hide it, but we can somehow extend the closing and make sure we are working within the criteria to get you qualified and approved with another lender. So always shop around, go to a wholesale mortgage broker, because that is going to save you the most. My name is David Xie with the Xie Mortgage Team. I can be reached at 757-478-8493, and give me a call. I'm just saying.